looking a little sketchy out there. What's going on, everyone? Jeremy Hritz here. Courage pays better than fear trading. Happy weekend. Happy Saturday edition of Driven. I hope that you guys all had a phenomenal week. And it's hard to believe that we are at the midpoint of November. And before you know it, we're going to blink and it's going to be December 1st. And it's just amazing to me. As I get older, I'm sure some of you have this similar experience, but things just go so fast, so quick, and you're left wondering where the time went. And we'll talk about that. I'm going to save the message component for the end of this one, but let's talk about the market. So yesterday, when I recorded the episode of Driven, I talked about how the bulls had come back strong, and they did. They bought the dip up hard, but we did see some rejection, and we still closed in the red on Friday. The candle will show green because we closed lower than where we opened, but in comparison to the previous day, the price is lower on the SPX Qs. And the way that candle was set up, we did get an upper wick. So we know there is a resistance there. And the bulls still have a lot of work to do if they want to maintain an upward trend, or if there's exhaustion from the bulls, they're going to give this thing up even more, and we're going to come down lower. Because just from a statistical perspective, if you look at the SPX, we drew down a little over 4% last week, and this week I think we either came close to 4% or we were just under at like 3.8, 3.9%. So back-to-back weeks of weakness on the SPX. The Qs last week, from all-time highs to the low, over a 6% drop. And we got another drop this week, 6%. Buyers step back in. So what we need to see here is whether or not this is just going to be a retest. Potentially there were short coverings that occurred, and shorts are going to pile back in. We're going to get more profit taking, and we're coming lower, and we are going to get a true 10% dip, or maybe even more. Or was that enough for the bears, and do the bulls feel ready to step back in? Let's look at both sides of this. Well, what is weighing in favor of the markets continuing to climb? Well, we know that the Fed, despite their hawkish tone right now, more than likely is going to cut in December. That more than likely will happen just because of the weakness in the labor market. Although you are having some Fed speakers who are saying that the labor market looks strong enough, economic growth looks strong enough, and so there is an outside chance that there is no cut in December, and that's potentially why we're seeing the weakness now. But we're still over, I believe, 50% odds of a cut in December, and even if they wouldn't cut in December, they're going to cut in January. And their fear is that by cutting rates too quickly, that it's going to be inflationary. They still think there's impact on inflation from tariffs. And so that's why it's not such a consistent message that, yes, they're going to cut in December. So that December meeting is going to be interesting. Do we sell down all the way into December to that meeting, and then they decide to cut rates and we fly? I mean, that's a possibility. We have to keep that in mind. But we're still in an easing cycle. And there are other factors out there from a bullish lens that give hope to the bulls that they can continue this push. One being the seasonality. This is typically when people step into the market and front run a rally into the end of the year, the Santa Claus rally, which I'll be talking about a lot here over the next few weeks. So typically you see an inflow and people getting into the market to catch that year-end run. So that's in favor of the markets as well. And then there's also, too, depending on who you listen to, people who are saying that inflation is going to come down. The next few reports that we're going to see inflation cooling. So that's a positive for the market as well. And earnings have been strong from companies across the board. The majority of companies are reporting beats. So that's positive. So there are factors that can play into us continuing to go higher in this bull cycle. And we haven't had a lot of weakness on this run since we dropped in April. So, we're finally getting it, and it just seems weird, right? Because things have moved up, but it's part of the market cycle. Now, bearish factors that can continue to push down on this thing. Well, it's the uncertainty about the Fed. Let's say that they are going to maintain a neutral position, meaning that they're not going to cut at all in December and January. That can put downward pressure on the market. That could send us lower. The second thing, all this, how can I say this? Just uncertainty surrounding what's happening governmentally. The shutdown just ended. There's fear of the fallout from that, the impact on economy. How much did it slow growth down? That is a pressuring factor right now on stocks. And we haven't received any data. And I talked about that. Not having that data doesn't provide the Fed or investors the information that they need to really be able to make a committed decision that, hey, I can see this move continuing. So, that's another factor. And there's something else out there that we need to keep an eye on too. And that's a potential U.S. Military action against Venezuela. And right now we're hearing talks about how they're attacking narco ships. They're trying to stop the flow of illegal drugs into the U.S. But there are some people who are saying that there's a bigger reason why the U.S. wants to engage in a conflict with Venezuela. And I'm not sure if you're aware of this, but it has the largest supply of oil in the world, right? So potentially this is this narco attack, shutting down drug flow, is a guise for what is really at work here, and that's the U.S. getting in control of that massive oil supply. So pay attention to that. If we see some news come out about a military conflict, full engagement, I'm not saying that that's going to happen anytime soon. However, that could be something, at least in the short term, that puts downward pressure on the markets. And then you have the uncertainty with the tariffs, whether or not the Supreme Court is going to uphold them, what that's all going to look like. So there's definitely pressuring factors out there, but we'll see what happens. And then just a few other notes here. Bitcoin just continued to dump yesterday. It got down below 94,000. It was the upper 93s, which, man, that thing just continues to drop. And let's see if it wants to come lower. Is it going to retest the 80s? It very well could, but keep an eye on that. And, I believe that if we're going to see an end of year rally, that we've got to see the risk come back on for the crypto space. And we're not seeing that because it cannot hold gains. It hasn't shown the ability to hold any of its gains and bounces. And it just continues to drop. So it looks like that's going to fall more. And then the last thing I want to point out, yesterday it was revealed at market close that Berkshire Hathaway made a purchase of Google, and it is now in their portfolio. Very, very interesting. And to me, the way I take it, because Berkshire Hathaway is very, very conservative and they're sitting on a huge cash pile. They typically, they're notorious for buying stocks at fair value, that they were willing to buy it at its price now, being as high as it is. To me, that's a bullish signal that I don't think too many people have thought about yet, maybe don't even know about it. And let's see what the corresponding response to that is. Because if you have Berkshire saying, hey, even though markets are elevated, we're at these all-time highs, I'm willing to buy Google, that tells me that men and women who are smarter than I am in the financial space see upside potential left with Google. Okay? So I think there's a chance as a result of that. That's a vote of confidence for big tech. I'm very, very curious to see what happens on Monday. And we did see the Qs add some gains post-market Friday. So pay attention to that. That's a really interesting thing. Could be a vote of confidence. And the last thing, I talked about being in a rush and just taking time to slow down. All right, this is a longer episode of Driven here. And I work with tons of traders and investors out there through my coaching program. And one of the common threads that I always hear, I want this to happen now. I want this to happen now. Slow down. Give yourself some grace. It does not need to be accomplished all at once. You have time. And I often say, if you can't have it today, but you can have it a year from now, 2 years from now in trading and investing, do you not want it? Right? So a delay isn't a denial. And right now, maybe some of you had some losing trades this week. I know that I had a red week. I haven't had one in a while. It happens. But understand that it's part of the process. And if you're not making the progress that you want, you just have to stick with it. You just have to keep going. Give yourself the grace of knowing, hey, this is not a neat and clean journey. You're going to have your ups and the downs. And sometimes you're going to feel like you're not where you want to be. But know this, you are in the arena. You are fighting the battle to learn. And if you keep at it, and if you keep at attacking, and you keep getting up when you get knocked down, eventually you're going to win and you're going to have that breakthrough. So be patient, be gradual, and enjoy this weekend. Relax, take some time, stop, chill out. I'm going to try to stay off the charts today. Let's see if I can. But I wanted to leave you with that message. And so, ladies and gentlemen, as always, make it a great day. Honor the moment and be grateful. Take care, everyone.